Before you learn what is Forex trading, you need to understand what is Forex first. So the term Forex basically stands for foreign exchange. The foreign exchange market is the global marketplace where the world's currencies exchange hands at a mutually agreed rate, which is what we call an exchange rate. These exchange rates change every single second, so the market is constantly fluctuating. So what we are essentially doing as Forex traders is that we are speculating on this exchange rate, on whether it will go up or go down. Now, the Forex market is actually the largest financial market in the world with a daily trading volume of $6.6 trillion. Not a million, not a billion, but trillion with a T. It is also 200 times bigger than the largest stock exchange called the New York Stock Exchange, right? So based on this graph, you can just see how huge the Forex market is. And it's basically the market where there's the most amount of trading volume and the most amount of people, exchanging currencies every single day, right? So large financial market, lots of liquidity and lots of volume. Now, the Forex market is open 24 hours a day and 5 days a week from Monday to Friday, and it is only closed on the weekends. Therefore, unlike the stock or the bond markets, the Forex market does not actually close at the end of each business day. Now, Forex trading is basically the conversion of one currency into another. Example, you are converting the Great Britain pound to the US dollar, right? So we all have probably seen this, right? At the airport or whatnot. It's basically like a currency exchange booth. So let's say today you go from UK, you go from London, and then you travel to the United States. Maybe you go to New York or something. And in that case, you cannot be using the currency they use in UK, which is pounds, in US, right? You have to convert the pounds into US dollar. So you would usually go to this currency exchange booth and tell them, hey, I want to convert my pounds to US dollar. And then they will give you a certain exchange rate, and then that is when you are able to convert however much pounds that you have into US dollar. Now, when you do that, when you convert your pounds into US dollar, you are essentially participating in the Forex market, right? So, yeah, you probably have been trading Forex without even realizing it. As long as you have traveled to any other countries other than your own one, then you have participated in the Forex market. So Forex markets are always quoted in currency pairs. The base currency is on the left of a currency pair, while the quote currency is on the right. The base currency is always equal to 1, and the quote currency is always equal to the current quote price of the pair. So this means that the price of the pair, in this case, Euro USD, the price of the pair is this one right here. It's basically stands for how much of the quote currency it costs to buy 1 unit of the base currency. So when you trade Forex, you are essentially buying one currency while selling another. Let's look at this example that we have right here. For example, Euro USD equal to 1.35361. So in this exact scenario, Euro is the base currency, right? Because it's on the left. USD is the quote currency because it's on the right. And what it means here is that it would take 1.35361 USD to purchase 1 euro. Okay. So once again, if you go Google and search, let's say you want to convert euro to USD. So you search euro to USD in Google, and it will probably come up with like a graph that looks something like this. And what we have over here, this is a graph that actually displays the fluctuations of the exchange rate. So you can see 13 May, on the 3rd May, it was probably only 1.08, and then right now it's like 1.09, right? So it actually increased over the past few days or so. So in this case, when you see this right here, this basically means what? The Euro USD is equal to 1.09. So it takes 1.09 US dollars in order to purchase 1 euro. Now, when you buy Euro USD, you expect the price of Euro to rise. So you buy Euro, which is the base currency, and you sell USD, which is the quote currency. Now, if the euro strengthens against the US dollar, which means the euro goes up, right? Guess what? You make money. Now, when you sell Euro USD, that means you are expecting, or rather you're forecasting, that the price of euro is going to fall. So in that case, you will sell euro, which is the base currency, and you buy USD, which is the quote currency. So if the euro actually weakens against the euro USD, right, it actually goes down, then guess what? You make money. So this is essentially how Forex trading actually works. Now, for one currency to go up, there will be another weakening against it. The rule of thumb is that all currencies cannot go up at the same time. Just think about it. It's basically the economy of a country, right? The currency basically stands for the strength of the economy of a particular country. So it does not make sense for all currencies to go up at the same time. There is always going to be a winner and a loser. That is just trading in general. Trading is a zero-sum game. That means if one currency is going up, the other one, the quote currency, is most likely going to go down, right? So same thing in trading. If you win, that means someone out there is losing. If you lose money, that means you're essentially transferring your money to someone out there, the winner, right? So Forex traders actually weigh up whether a currency looks likely to strengthen or weaken against another. Then they trade that pair accordingly. Now let's talk about who actually trades Forex, right? There's a few groups of people. The first one is what we have, the big banks, the investment banks, basically the big financial banks. And we also have your large financial institutions, like your hedge funds, your JP Morgan, basically all the big banks out there, as well as, your hedge funds, like the Soros Fund, even Warren Buffett's Berkshire Hathaway. Basically, all of these large financial institutions and big banks, they trade Forex, right? They actually manage like pension funds or investment funds, and in that case, they're going to use Forex to kind of hedge it, right, and trade with it. And then we got central banks and government. These people are very important when it comes to Forex because they are the ones that actually come up with the policies, right, to actually determine the supply and demand of a currency. And when they do that, that determines the price of where the market is going to go, or where the currency pair is going to go in the long term. And then we got large commercial companies, right? Just think about it. Large commercial companies, they might have employees overseas. In that case, when they pay their employees, they need to convert the salary to their employees' country's currency, right? So yeah, another example could be, when you purchase something from the large commercial company. So let's say right now, example, I'm in Singapore and I want to purchase something from Amazon in the US. In that case, I go to, I saw this book that says that it's $20, right? $20 book on Amazon, so I purchase it. When I do that, once again, Forex comes into play because my currency is SGD, Singapore dollars. So I have to, in order to purchase that, the bank, or rather Amazon, will automatically convert the 20 USD into SGD so that I can pay them with SGD, and then they will convert the SGD back to USD, right? In that case, guess what? I've just essentially participated in the Forex market as well, right? So large commercial companies, they participate and trade Forex as well. And then there's the small fishes in the ocean, which is us, which is retail traders, which makes up like the smallest trading volume among these other groups that we have right here. So based on this, big banks, large financial markets, these are what we call smart money, and they are the one that actually controls the market, and they're the ones that's actually able to manipulate the market, so to speak, right? So that is why as retail traders, we understand that we have no buying or selling power that is big enough to actually move the markets. So what we can do as retail traders is that we can only try to trade with them rather than against them. That's the only way to actually make money in the markets. Now, how do you determine whether a currency pair is going up or down? How do you know when to buy or when to sell? How do you know that the market is going up or down? How do you predict where the market is going to go? The truth is, as retail traders, we can't predict where the market is going to go. And we don't have to do so in order to make money. Because trading is simply a probability game, which means that every trade outcome is random. No matter how confident you are on a trade, it's always a 50 50% chance that you're going to win the trade and a 50% chance you're going to lose the trade. However, what we can do is that we can increase the probability of us winning a trade by developing what I call an edge. An edge is what separates winning traders from losing traders. You see, the thing about beginner traders is that most beginner traders, they don't have an edge, and as a result, they are not able to make consistent profits. Yes, they might make some money here and there, but they will always find it incredibly difficult to profit consistently. But as they master the 3 M's, which I'm going to go through soon, and start to focus on the process rather than the outcome, that is when they will transcend from the randomness of the market and start to make consistent profits. So your edge is basically your trading strategy that helps you make more profits than losses. As simple as that. So in order to develop your edge, you need to master what I call is the 3 M's, right? So the first M is method. You need to have a profitable trading strategy that works in every market condition. The second M is money management, right? You need to know how to preserve your capital so that you can actually grow your trading account rather than blow it and lose your money. That means you need to learn how to take trades with high risk to reward ratio while keeping your risk consistent. And then lastly, you got your mindset, which is where you need to learn how to actually control or rather manage your emotions when you are trading your live account, right? Especially when you have your hard-earned money on the line. You know, all your emotions will start coming into play, your fear, your greed, your FOMO. All these emotions are going to cause you to take stupid trades and make stupid decisions. And as the saying goes, if you play stupid games, you win stupid prizes, right? So you need to learn how to execute trades based on mechanical rules rather than your emotions. When it comes to Forex trading, we are essentially trading currency pairs. So these are essentially like your best friend. Now let's talk about what are the different types of currency pairs and which one should you trade. Firstly, you must understand what are currency pairs. Currency pairs is basically a price code of the exchange rate for two different currencies traded in the Forex markets. All currencies are identified by their own ISO currency code. Here's what I mean. When you see currency pairs like GP, GBP, GB stands for the Great Britain and P stands for pound, which is the currency for the Great Britain. So you can see all these currency pairs, right? If you look at their name, their ISO currency code, it shows you the country and the currency. And once again, another example, JPY, the Japanese yen. And you can see the first two letters is the country, which is Japan. And then the third letter is currency, which is yen pair. And then lastly, once again, the standard best friend of every Forex trader, the US dollar. You can see US, United States, the first two letters, followed by the United States dollar, which is the currency. That is why it's called USD. So basically, all currency pairs are identified by this personal ISO currency code, so that every single trader, when they look at a currency pair, they know exactly what they are trading, what country is this currency pair from, and what is the currency that this guy is actually trading. Now let's talk about the different types of currency pairs. Firstly, you got the major currency pairs. Major currency pairs are basically pairs that include the US dollar. Things like your Euro USD, GP USD, NZD USD, USD JPY, USD CHF. Now, if you're not familiar with this is basically the Euro USD, Great Britain pound against the USD, New Zealand dollars against the USD, and then the US dollar against Japanese yen, and then US dollar over the Swiss franc. So these are basically the main currency pairs inside the Forex market. What this means is that these major currency pairs, they have the most amount of liquidity, right? That means most people are trading these major currency pairs. They are like the most commonly traded pairs. This means that the market tends to present us more trading opportunities when it comes to the major pairs. USD CAD, I almost forgot this, the USD against the Canadian dollar. Now let's talk about minor currency pairs. Minor currency pairs are basically pairs that include any two of the major currencies except the USD. So basically, minor currency pairs is basically any of the major currencies like your Euro, Great Britain pound, NZD, JPY, CHF, Canadian dollar. Any two of these major currencies, you combine them together, you get your minor currency pair. And every single minor currency pair, there is no USD inside. It excludes US dollar. So, example, Euro JPY. Euro, a main currency pair, JPY, and also a main currency, another major currency. And then you got Euro CHF, Euro Swiss franc. And then you got GBP AUD, the Great Britain pound against the Australian dollar. And then you got GBP JPY, Great Britain pound against the Japanese yen. And then you got Australian dollar against the Canada dollar. And then once again, AUD against the Swiss franc, the Australian dollar against the Swiss franc. Lastly, you got the exotic pairs. These are the pairs that is dangerous. This is the ones that we don't trade, alright? Because why? Nobody trades them. First of all, nobody trades them. And second of all, there's extremely low liquidity and low volatility since nobody is trading them, which means price tends to go crazy when like a news event come out or whatsoever. So these are basically the pairs that include one major currency pair and another currency from emerging markets like Africa, Thailand, what else? Mexico, yeah, basically from emerging markets. So it's example like USD SGD, the United States dollar against the Singapore dollar, or the United States dollar against the Thai bahts, and then Euro against the Hungarian dollar. I think that's the Hungarian currency. I don't know what's that. And then you got the Australian dollar against the Mexican peso, and then there's Canadian dollar against SGD. So all of these are examples of exotics. As much as possible, we try to stay away from exotics, because let's be honest, you're not going to make any money from trading exotics. And if you're not going to make any money from trading exotics, what's the point of actually going through them, right? This is just for you guys to understand that these things exist. These exotic currency pairs exist, right? But for you, just stick to what's work, which is either the major currency pairs or the minor currency pairs, which will present you much more trading opportunities. Next, which currency pairs should you be trading? That's the $1 million question. I will advise you, if you are a complete beginner, which I believe you are since you're watching this lesson, stick to the major currency pairs. Major currency pairs like what? Euro USD, GBP USD, NZD USD, USD JPY, USD Swiss franc, and USD Canadian dollar. The reason why I ask you guys to stick to these major currency pairs is because these currency pairs have a lot of daily trading volume, right? And they are the most commonly traded currency pairs in the world, which means that they're going to give you sufficient trading opportunities, right? Especially if you are a beginner, you will start to see a lot more trading opportunities as you begin to level up in trading, right? And these are the major currency pairs they can go to. Now, the good rule of thumb that I always tell my students, and what I do myself, is that I will always stick to 1 to 4 currency pairs. Right here, you can see this is my watch list right now, and this is what you should not do at the start of your trading journey, right? At the start of trading journey, I will absolutely just ask you to focus on mastering 1 to 4 currency pairs max, right? 4 is like the maximum number. That's like, you should not go more than 4 if you are a beginner, right? And it's always going to be better if you become a master of one rather than a jack of all trades and master of none. Right, so I'll advise you, if possible, focus on mastering 1 currency pair. And maybe the reason why I want you guys to have at least like 3 currency pair inside your watch list is because if that 1 currency pair does not provide you with trading opportunity on that day, you can look at trading opportunity from the other 2 currency pairs, right? So yeah, stick to 1 to 4 currency pairs. And the reason why I have like 7 currency pairs right now on my watch list is because I'm an advanced trader, right? I've been trading for 4 years now. I know exactly what I'm doing, and it's much more easier for me to analyze the charts and actually come up with my bias and stuff. And right now, the thing is, I don't even like really trade all of them. You see, what I do is that I put like a red flag beside the currency that I believe that there's going to be an upcoming trading opportunity, and that's the one that I'm concentrating on. So if you look at this, I'm only concentrating on like 2 currency pairs, which is GBP AUD and NZD USD currently, because I believe that there's going to be an upcoming trading opportunity. So like I said, focus on maximum 4 currency pairs and you'll be good to go. Now, in order to become a Forex trader, you have to understand the way we speak. You have to understand the terms inside Forex trading. And that is when I want to teach you guys the Forex language and lingo. This is like somewhat like a dictionary for you guys to understand the terms that is commonly used inside Forex trading, or rather used by Forex traders. Firstly, what we have is pips. Pips is basically what I call, or I don't know, not what I caught, but what is called percentage in point. It basically stands for the amount of change in the exchange rate of a currency pair. A pip is the fourth number after the decimal point. So 1 pip is equal to 0.0001. So if you look at this currency right here, Euro USD, right now its quote price is 1.0926. In this case, the pip will be the fourth number after the decimal point. So this is the decimal point, 1, 2, 3, 4. There we have, that is your pip, right? So over here, right now, this is the pip. So it's basically the fourth number after the decimal point. So if this goes from 1.0926 to 1.0927, that means it increased by 1 pip. On the other hand, if this goes from 1.0926 to 1.025, that means it decreased by 1 pip. Now, let's go through a few examples. So, in this example right here, price went from 1.2468 for Euro USD to 1.2470. In that case, you can see, price just increased by 2 pips. Okay? And then another example right here, price went from 1.2576 to 1.2566. Price just went down and fell by 10 pips. Remember, how you get this 10 pips is you take this 76 minus 66. You get 10 pips. Over here, 68, 70, 70 minus 68, you got your plus 2 pips. And then last example right here, 1.2176, and it increased to 1.2276. In that case, you can see this right here went from 176 to 276, so it's basically plus 100 pips. Right, so as time passes, you will start to familiarize yourself with this concept of pips. Right, this is essentially like how we used to measure the change in the exchange rate of a currency pair, and it also allows us to measure our profits or loss. Now, for Japanese yen pairs, it's a little bit different because Japanese yen pairs only go up to 2 decimal places, right? So Euro USD, all the major currency pairs, all the minor currency pairs, they have like a string of numbers like this, right? But Japanese yen currency pairs, they only go up to 2 decimal places. So you look something like this, 170.67. In that case, 1 pip is the second decimal place, the number in the after the, yeah, how do I say this? The second number after the decimal point. So in this case, the second number after the decimal point is this one right here. So this one right here is your pip for Japanese yen pairs. So if price of Euro JPY go from 170.67 and it increased to 170.68, then guess what? Price just increased by 1 pip. If price goes from 170.67 to 170.65, price just decreased by 2 pips. Now, there's also this thing called your pipettes. Pipette is basically micro pips. It's 1/10 of a pip. So a pip is like the fourth number after the decimal point. A pipette is basically the fifth number, right? So in this case, usually if you go to TradingView or your broker, you will see that the currency quote price looks something like this, right? The string of number that we have right here, and then there's like this small little number right here on top of like basically the pip. Yeah, on top of the pip count, there's this small little number. In that case, that is the pipette. So right here, this is the pipette, and if price goes from 1.09263 to 1.09265, you can see the pipette change, right? So 3 to 5, this means it just increased by 0.2 pips, right? So 1 pip is basically 10 pipettes. So it's like 0.1 pip is this number right here, right? So if price goes from 1.09263 to 1.09265, that is plus 0.2 pips. Now, lot size. Lot size is basically the size of your position, or rather how many units are you buying or selling of a particular currency pair, because Forex is traded based on lots. Now, there's 3 types of lot size. First one is the standard lot, the biggest one, and that is when it's what is called one lot, right? It's like a volume, 1 lot. In that case, that means you are either buying or selling 100,000 units of that currency pair. So if you are buying 1 lot of Euro USD, that means you are buying 100,000 units of Euro USD. And that means every time price increase by 1 pip, you are making or losing $10. And every time price move by 1 pip, that is $10. Okay, then next, there's the mini lot, which is your 0.1 lots. In this case, you are buying or selling either 10,000 units of EURUSD or GBPUSD, right? In that case, every time price move by 1 pip, it's only a $1 increase or decrease. And then lastly, you got your micro lots. That is your 0.01 lot. That is the smallest lot size that your broker will allow you to trade with. In this case, you are buying or selling 1,000 units of EURUSD or whatever currency pair that you're trading once again. And this time round, whenever price move by 1 pip, it's only moving 10 cents, which is $0.1, right? So that is your lot size. Now, I want you to make sure that you really familiarize yourself with these terms. Firstly, bullish. Bullish means that you are expecting price to increase. Bearish means that you are expecting price to fall. So if I say that I'm bullish on EURUSD, that means I'm expecting Euro to go up in price. If I'm saying that I'm bearish on Bitcoin, that means I'm expecting Bitcoin to go down in the near future. Long means buy, short means sell, right? As simple as that. So if I say that I'm longing EURUSD, that means I'm buying EURUSD. If I say that I'm shorting Tesla stock, that means I'm selling Tesla stock. And then stop loss. Stop loss is basically a preset price where your broker will automatically close your open trade, your open position, if the trade does not go as planned, right? So when this happens, it protects your capital and it prevents you from losing more money than you want to lose. And then your take profit is the profit goal that closes the trade if the trade do go as planned, right? So if you manage to win the trade, that means that price has most likely hit your take profit, right? Price most likely hit your take profit and you got out at the goal that you set out for yourself for this trade to play out. In that case, the trade went as planned, it hit your take profit, you make a profit, right? Then stop loss is basically the opposite. So if the trade does not go as planned, the broker will automatically close the trade at a preset price and prevents further losses. So now I'm gonna show you your new best friend for the next 5 years or 10 years or however long you plan to trade. And it's this beautiful software called TradingView. So go Google, search TradingView, right? And click on the first link right here, TradingView Track All Markets. This is basically your analysis platform. This is where you actually do your analysis when it comes to your charts or whatever you're trading, be it crypto, stocks, Forex, futures, whatever you're trading, you're going to be analyzing your charts here. So like I said, this is going to be your wife, your new wife, or new husband for the next few years or so, right? So make yourself comfortable. So first thing first, when it comes to this website, it probably looks something like this. Don't know if it's the same guy or not, but it looks something like this. So just go to products, and then you probably see something like this, or maybe you can just explore around here. There's even like the community that they have right here, and then you can see the different sort of stuff that you can trade. You got stocks, you got ETF, you got crypto, Forex indices, futures, bonds, even about the economy, some stuff about the economy. There's news as well, and these are the brokers that's integrated with TradingView, and then there's more stuff right here. So just go to product and just go to super charts. This is basically where you can actually get the charts. And then if you press this search button right here, you can search anything that you want to trade and it will appear. So let's say you want to trade Tesla stock. Tesla right there, just click on it and then you can just launch the chart of Tesla. But in this case, we are trading Forex, so let's just search EURUSD. So I just click EURUSD. And bam, I will have the chart of EURUSD, right? So when you look at this, all of this stuff right here, this is basically your Japanese candlesticks charts, right? So Japanese candlestick charts, I'm not going to talk too much about Japanese candlesticks in this lesson. This is just a walkthrough on how to use TradingView. Japanese candlestick lesson is the next one, I believe. So but basically right here, this basically shows you price, right? All of these Japanese candlesticks help you understand who is actually in control of price, whether it's the bears, the sellers, or the bulls, the buyers, right? So that is basically the chart. section. Just go through section by section with you guys. So maybe we start with the right hand side. So the right hand side, we have your watch list. Right, at this watch list, you can just add whatever you want inside your watch list. You know, you want to trade EURUSD, and then you want to add all your major currency pairs, GPUSD, and then USD JPY, USD CAD, and then maybe even AUD USD. Right, just add all of these currency pairs, whatever you want, onto your watch list, so they can just focus on these few currency pairs. And if you want to remove any, just press this X button right here. Bam, it's gone. Right, and if you want to add, just press this plus button. No rocket science right here, right? Right, so once again, you can actually put like whether you want description to show, or you just want the logo, the ticker, which most of you guys just select the ticker so it looks more clean. And then over here you got alerts, right? So alerts is basically where if you press this plus button right here, you can set an alert at a specific price point, right? So let's try it out. Press the alert button right here, and then let's say you want an alert that TradingView notify you when price crosses maybe 1.10, right? So 1.10, I want an alert, right? So you can choose whether you want it only once or every time price actually crosses 1.10. And then you can then choose what alert name you want. Maybe you want to put analyze Euro USD, right? So put that on. Once you created the alert, guess what? TradingView will personally send you a notification when price eventually reaches this 1.10 level. It will send you something like either a message or an email telling you that, okay, bro, your USD is at 1.10. You can start analyzing it or whatever you want to do with it. So let me just remove that. And then next, right here, this is the data window. It basically shows you all the data about the thing that you're trading, be it currency pair or stocks or whatnot. It shows you all the data right here. You can see the high, the low, everything. It just adjusts depending on your cursor. Yeah. So, and then you got this window right here, which shows you all the different sort of stars. Yeah, basically everything like US exchanges, all sort of stuff. I don't really use this honestly, so we can just ignore that. And you can see this is where you can even create your own ideas when it comes to the charts. You know, never really use this once again, but yeah, this is where you can actually publish your trade idea, right? And then this is a chat function where you can actually chat with other people, be it in the Forex community or the cryptocurrency community or even the stocks community or whatnot, right? Or even gold, right? You can just have a chat with people, see what other people are doing, you know. Yeah, I wouldn't really recommend you guys to use this chat function because our goal is to help you become an independently, consistently profitable trader who's able to think on his own feet and trade independently without relying on other people. So yeah, I wouldn't really recommend you to use this, but if you're bored, you know, why not, right? And then this is other people's ideas, idea stream, other people's ideas, right? Once again, wouldn't recommend you to use this. I don't use this myself, and just, yeah, and then, yeah. So yeah, that's basically for the right side. Now let's go to the left side, right? No, actually, let's go to the top, right? So top right here, once again, this is a search button right here. It's the same thing. You search for whatever currency pair that you want to trade, just search right there. And then, yeah, you can just, you know, whatever you want to trade, just search right there. And then, right here, we have your time frames, right? So over here, these are basically the time frames that actually you want to trade on, right? So whatever time frame that you're on right now, each candlestick represents that time frame. So if you're on the daily time frame, what this means is that each one of these candlestick represent 1 day. So this is 1 day, this is 2 days, this is 3 days, 4 days, 5 days ago, 6 days ago, 7 days ago, right? So basically, this is how the time frames work, right? So whatever time frame that you're on, the candlestick literally represent that time frame. So right here, this is the 4 hour time frame. You can see the time below or the bottom axis. You can see this is at 9 a.m. and then this is at 5 a.m. which is 4 hours ago, and then this was at 1 a.m. which is 4 hours ago, right? So basically that's how the time frames work. If you're on a 15-minute, same stuff, right? Each one of these candlesticks represent 15 minutes, and you can see right now this is 12 p.m. and then this was 15 minutes ago, which is at 11:45. This candlestick was formed, and then this is at 11:30, which actually created this candlestick right here. And you can see right now is actually creating a candlestick. It's creating the 15-minute candlestick, and you have the timer right here, which shows you how many minutes remaining up till this 15 minutes is up, and then the entire candlestick will be formed. right? So we don't know whether it's gonna be like something like this or something small or whatnot, right? We still don't know what's gonna happen, right? We have to wait until this timer is up, wait for this candlestick to fully form, and that will be your new 15-minute candlestick, right? And then yeah, you can see these are basically all the time frames, right? Whatever time frames that you want to have on like your favorites right here, have it on display. Just press the star button beside it, yeah, and you will have it. And then next right here, this is basically your different sort of charts, right? So there's bar chart, there is hollow candles chart, there's volume candles. Okay, this is a free version, right? This is basically another of my account. I have like the premium version, like the most expensive one, because TradingView was kind enough to sponsor me, right? But basically, if you're on a free one, yeah, you are limited to certain stuff, right? So yeah, you're limited to certain features, yeah. But you can see basically this is where you can switch all the different charts that you want, and some is like paid, like the volume one right here. Yeah, like this one right here, which is really, really cool, but it's paid. Yeah, and you need to upgrade and stuff. Right, so certain features are unlocked, but overall, this entire platform is free for you. But if you want additional features, then you can consider getting the paid one. Right, so if you're just starting out, I'll just recommend you to just take the free one. That's what I did, right? Just take the free one is enough for you. And then indicator step right here. Actually, you can get whatever indicator you want. You can just search, okay, I want RSI. And then RSI, boom, relative strength index, boom, indicator right here. Maybe I want a moving average. Then boom, moving average right here. Yep, you can see right there. But at 1% club, we don't teach you how to use indicators, so just remove all that bullshit. Right. So next, this is your templates. Right, you can actually save the indicator template and it will just appear right here. So like this, this, you know, it's like different templates basically. And then once again, the alert window, same stuff. And then there's a bar replay tool, which allows you to, you know, go back in time, right? You can see, you can just go back in time and boom, you are literally back on April 1st. And then you can actually, you know, you can see the price moving, which is really, really cool. You can change the replay speed, make it a little faster, you know. And then boom, 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 boom. It's basically like a time machine where it allows you to go back in time and then jump to present. There you go. So that's basically the bar replay. But the free version only allows you to bar replay on the daily time frame. So if you're gonna go down to like the 4-hour time frame and bar replay, it will require you to get a paid version. Right? You see right there. Yep. So yeah, that's basically for the top bar. And then before I move on to the left side, I want to talk about how you can actually change your how your chart look like. So you press right click on the charts and then you press the settings, and this is where you can actually change your candlesticks color. Right? Maybe you want it to be blue, and then maybe you want the other color to be light blue, right? And then you can change the border color as well to blue and light blue, so that you know it matches itself. And then boom, yep. So you can see you just change your entire candlesticks color, and then you can also change like the grid, like the background, right? So if you don't really like the grid, not a fan of it, you want to keep your charts as clean as possible, you can just go here. You know, you can change the grid lines to none. And you can even change the background color, maybe on black or I don't know, gray or yeah, whatever. Or you can even choose like a gradient color, which is quite cool. Choose 2 colors and it will look like a gradient thing. Yeah, so for me, I just stick with white most of the time. And then you can even add a watermark if you want of like the currency pair. You can see you just stay there forever. Yeah, and the rest of the stuff you can just go explore on your own, but basically that's how you actually customize your charts and really make it clean and make it really personalized. Once you're done with that, make sure you save it as a template, right? So just press template right here, save as. Maybe I want to put like the sea waves color, right? They just save it, right? You do this because like next time, you know, for some reason your charts look like this again, then you can just press like right click, go to color theme, and you can actually change to the template that you actually save at, which is like this. Yeah, so that's basically how you do it. You can see that I have like different template right here, the red and blue one, and YouTube one, and yeah, this is a normal one. Right, so yeah, that's basically how you customize your charts to make it your own. Once again, you must make yourself comfortable because like I said, this is going to be your best friend from now on. So might as well make yourself feel comfortable, make yourself home, right? And then let's go to the left side. This is where you will spend the most time on, right? This is where you actually get all your tools. So you got the trend line tool right here, which allows you to draw a line, which is cool. And then you got like, I'm just going to show you like the ones that I use the most. And you got horizontal ray tool right there. And then you got horizontal line tool, right? Just put that in, horizontal line, and it just goes like It's just like an extended line like this, and it just drags all the way across the charts. And then you got your Fibonacci right here. And then, yeah, once again, I'm just going to show you the ones that I use, because I don't really touch all of this stuff actually. Like most of these, I have never literally used it before, right? And then, yeah, all this stuff, I don't really use it before, but I can just explore. I don't even know what this is. Yeah, some stupid pattern, ABCD pattern, right? Yeah, so, and then you can have your long position too, which actually like kind of forecasts, you know, what price is gonna do. Place your stop loss, place your take profit. If you're entering for a buy, this will be a long position too, which will be very useful to actually forecast your risk to reward ratio, or your short position too. If you enter for sell, place that there, set a stop loss, set a take profit, find out what's your, you know, your risk to reward ratio right there in the middle. So yeah, that's the tools. And then there's another very useful tool, price range tool, which allows you to calculate the pips, right? So let's say I want to calculate what's the pip from here to here. I just drag it from this all the way up here, and then this last number right here, 125 pips, it basically tells me like how many pips move is this, right? So it's just a 125.6 move. So it's very useful. It doesn't require you to manually go and calculate the pips. It just do the hard work for you. And then there's like a bunch of emojis right here. I don't even know why it's this emoji. And you can add a text, right? Say, hi, I'm Brad, right? Whatever you want. And then you can double click on it. You can customize the color that you want, right? Make it bold or whatever, white or whatnot. You want to increase the size. Yeah, you can do on background, boom. Change your text color, boom. You know, yeah, you can just go and play on your own, right? You can add text, and then you can add a call out as well that says, okay, I want to mark this part, and they say this is a bearish candlestick or something like this, right? Something cool like this. Yep. And then the rest of the stuff, don't really use it. Once again, yeah, then this is where you can just remove all your drawings at once. So if you have like multiple drawings, you can just press remove drawings, or you can remove all the indicators. And then this is where you can actually hide your drawings. So let's say like, you know, you marked up a bunch of stuff here, right? Mark up a bunch of stuff here. Like let's say you got this, and then you got this, all this stuff right here. You press this, it just hides everything, right? Just your candlesticks alone. And then once again, if you want to remove all the drawing, just press this, remove drawings, right? And then yeah, the rest of the stuff you can stay in drawing mode right here, which allows you to keep on using the tool that you are stuck with, right? So which is really cool. And yeah, that's basically it. And then at the bottom panel, this allows you to connect to your trading broker, right? Only these brokers that you have right here, you see right here, these are the brokers that can actually connect to, right? So yeah, and then this is the strategy tester, which I don't really use. Pine editor, don't really use this as well. Yeah, so the rest of the stuff, I don't really use it, but you can explore on your own. But this is basically how I personally use TradingView, right? These are the tools that I have. And once again, before I forgot, this is the favorite tools bar. And if you want to add like your favorite tools into like this little toolbar thing so that it appear like this, you can just like easily access it like this, right? Whatever tool they want, just easily access it, right? You need to go to the tool that you like and then just press the star button beside it, and then it will appear on this toolbar right there.
Hey guys, so this is a tutorial on how to actually use MetaTrader 4 to actually execute your trades. First things first, you need to go to your App Store or Play Store or whatever you have on your phone and search MetaTrader 4. Right, this is the one that I use, MetaTrader 4. There's also MetaTrader 5, which is the more updated version. The software, the interface is a little bit different, but essentially the same thing, right? So I just like to use MetaTrader 4 because I've been using it for so long, and yeah, there's not much difference between MetaTrader 4 and MetaTrader 5. It's just that MetaTrader 5 is just more updated. It just looks much more updated, right? So MetaTrader 4, once you download it, open it, and it looks something like this, right? So first things first, you need to go and set up your account. So press settings right here, and then press this button right here. This actually allows you to add your live account or even create a demo account if you want, right? So just press this plus button right here. So two options, either you log into your broker like a live account, or like open the demo account. So if you're practicing, you can open a demo account that will be trading with virtual money. It'll be like a fake money that you can actually play with and actually practice your trades. Now on the other hand, if you are ready to actually, you know, connect your broker, right, just press this button right here, and then you search for broker right here. Let's say you're trading forex.com. Maybe like let's try Oenda right here. You can see, then you basically choose the live broker. Basically, if you sign up like a live account with your broker, it will show you the exact details on which one to choose and all that stuff. So yeah, choose one. Yeah, and then basically the instructions will be inside the email that you actually sign up the broker with, right? So I'm not going to show you how to do it, but this is basically how you actually set up your live account. Just press this and then just go set up your live account. And then this is where you actually open a demo account. So right now, I already have an account in place. This is like a live account right here. So just going to walk through with you what we have right here. By the way, this is like an old live account. I didn't realize that I have like $1,000 in this account. This is from like 2 years ago. Yeah, this is like a spare phone. You can see this shitty phone. Anyways, so let's go through this. So first things first, when you go to quotes, this is basically where you get all your currency pairs, right? So all your currency pairs, it's like a watch list on TradingView. If you want to add currency pair, just press add button and you can add like Forex currency pair. Just press this green plus button and it will go to your watch list, right? So whatever you want to add, let's say you want to add some Euro JPY or something, just search and then yeah, just add Euro JPY, add right there, and then it will appear here inside your watch list. Once again, this is something like a watch list. There's an advanced tab and there's also a simple tab like this. If you're a beginner, just stick to the simple one. So if you want to trade, right, just press the currency pair that you want to trade. Let's say I want to trade Euro USD, press trade, right? And the other one is it shows the chart. If you press chart, it will show you the chart of Euro USD. Let's go through the trade first. And then if you press details, it shows you the details of, you know, the spread and the margin and the other stuff, the swap and all that other stuff, right? So let's say Euro USD, let's press trade. Okay, so when it comes to here, this is basically where you actually execute your trades, right? This is where you actually place the buy or sell order, right? So this is the price that you'll be buying at, and this is the price that you'll be selling at. And then this is basically where you input your lot size, however much lot size you want to use. You want to use a 1 lot, a standard lot, or you want to use a micro lot, or 0.5 lot, or 0.26 lot, 0. Whatever lot that you want to use. This is where you actually input it, or even the smallest lot that we have right there, right, micro lot. So that is basically how you choose the lot size, right? You can even do this, like just adjust like lot size based on these buttons right here. So this is where you put the position size, and this is the currency pair that you are trading. And this right here, it shows you what type of order you want to actually enter for. Market execution means the moment you press the buy or sell button, you will automatically get into the trade, right? You will literally, your trade will be executed on the spot. However, if you want to have like a buy limit, sell limit, or buy stop, sell stop order, this is what it means, right? Let's just show you on the computer. So buy stop, sell stop is something like this, right? Something like this. So a buy stop is basically an order placed above price and price keeps going up. So if price is right here and you place a buy stop at this area right here, when price eventually get all the way up there, your buy stop will be triggered and then your broker will automatically get you into the trade. And then a buy limit is basically you want to place an order below where price currently is. So once price get below to that price, your broker will automatically get you into a buy position. And yeah, that's basically a buy limit. And a sell stop and sell limit is the same thing. It's just that in this time, instead of buying, you are selling. So sell stop is basically an order placed below price and price keeps going down. And sell limit is order placed above price and price then goes down. Alright, so back to the MetaTrader 4 tutorial that we have right here. So that's basically what it means to have buy limit, sell limit, buy stop, sell stop order. Yeah, and then this is basically where you place your stop loss. Whatever price that you want to place your stop loss, you know, you can just put it right there, 1.085 or whatnot, 1.782, and then you can place your take profit, whatever you want to put here and stuff. And then once you're ready, place your stop loss, place the take profit, then you'll press either the buy or the sell order. I'm just gonna maybe try out, give you like an example. So let's use like let's just put like a random S lot stop loss 1.089, 1.08, and then put like a take profit at like 1.09 and then press over buy. Yup, so that is basically how you actually execute a trade. And bam, you're inside the trade, you know. And then this is where it will show you this screen right here. This is your basically where you actually monitor your trades. After you execute your trades right here, go here, then this is where you actually monitor your trades to see whether your trade is hitting your take profit or stop loss, how much money you are winning right now, how much money you are losing right now. So right now you can see this is like negative 0.05. This is a drawdown because of the spread fees, right? So if you click on the position, you can see the details of the position, the stop loss that you place, take profit, and yeah, the swap taxes, other stuff. And then if you want to modify the position, because maybe you place your stop loss wrongly, or maybe you place your take profit wrongly, or you want to take partial profits, right, and close half of the trade and let the other half run, just swipe and press this pencil button right here. This allows you to actually modify your trade, right? Modify your stop loss, you know, maybe you place your stop loss wrongly, modify it, and boom, modify, update it. And then if you want to close the trade, press this tick button right here. You can see this tick button, press on it, and you can see you can close the trade right here, right? You can close with loss. Yeah, basically if you press this button, you will close the trade. Right, before we do that, let's just show some other stuff. Yeah, you can also add on to your existing position. Just press this plus button and you can actually enter for another trade on Euro USD as well. And then once again, this is the chart button, and this is the next thing that you want to look at. Before that, just a quick run through on this. The balance is basically how much money you have in your trading account right now. Equity is basically how much money you have in your trading account, your balance, plus your floating loss or profit. Right, and then margin, free margin, and margin level, all this other stuff, right? I will get through it inside another lesson. But basically, these are additional stuff that I personally don't really look. I mean, you don't really need to look at it, right? Basically, this is more on leverage and stuff, right? Which we'll run through soon. But these are all on leverage and stuff. But right now, you just need to understand that balance is basically how much money you have in your trading account, and equity is basically your balance plus your floating loss or profit, whatever that you have right here. And over here, this basically shows your floating loss and profit, right? So right now we are negative 0.08. So chart here, once again, chart, I believe there's nothing much to say about chart. It's pretty much quite similar to TradingView. You can also add your tools right here. You can have a cursor here. You can add indicators here. You can add freaking lines here. Yeah, basically whatever you want to do, it's like quite similar to TradingView. Yeah, you can see add a vertical line, right, and boom. Yeah, you can just have fun with this, and then you can adjust the time frame, 5-minute time frame, 4 hour, 1 hour, so on and so forth. Yeah, so this is something like TradingView. I personally don't like to look at the charts here because I don't really like the way that it looks. That is why I prefer to actually, you know, execute or rather analyze my charts on TradingView itself. And then once I'm ready to place a trade, like a buy or sell order, then I go on to MetaTrader 4 and actually manually come in here and actually place that buy or sell order. That's it. I'm just going to be using this to execute my trades and monitor my trades. And I'm just going to be using my TradingView to actually analyze my charts. So yeah, that's how you actually use MetaTrader 4. And yeah, that's the full tutorial on MetaTrader 4. And then once you close the trade, I forgot to mention, once you close this trade, whatever trade that you close, you will come to this page history right here. And you can see the trade that you closed today, the trade that you closed in the past 1 week, and the trade that you closed in the past 1 month or so. Yeah, so yeah, this is basically a trade I just closed. You can see close negative 0.04, and you can see the profit. You can see the if you withdraw money, you can see the withdrawal right here, and the other stuff that you can see right here, right? So balance, everything. So yeah, that's how you use MetaTrader 4. Very, very simple to use.
Today, I'm going to teach you how to become a successful trader who can bank consistent profits. My name is Brett Goh, and if you're wondering who the hell is this guy and why the hell should you trust this guy, here's what I've accomplished so far. I've been trading for 5 years and I've documented my entire trading journey on YouTube for you guys to see, or at least the past 3 years. So if you sort my videos back to the oldest, you will be able to see me live trading with less than $100 in my bank account and just basically documenting my entire trading journey. And my why when I started trading 5 years ago was that I wanted to retire my father, right, who was 65-year-old and still working very hard to put food on the table. And I'm glad to say that I've accomplished that goal, that big why, strong, compelling why that allowed me to keep going this year, right? At the start of this year, I managed to retire him. So that will always be my proudest moment as a son. And then, yeah, like I said, I lost money for 2-3 years. So yeah, I'm going to be honest and transparent with you and tell you that I lost money, right? I didn't came out of my mom's womb and just became a profitable trader who is smart and intelligent. I was a dumbass. I made a bunch of mistakes. I lost over $10,000 in one day. I lost the school fees that my dad actually paid me. And I lost my life savings. Okay, I'm a dumbass, all right? So yeah, it might help for you to actually gain somewhat like a relatability to me, like you can relate to me that you're a dumbass, I'm a dumbass as well. So I've been losing money for 2-3 years, and that's before I finally got like my breakthrough moment, my eureka moment where I made over $100,000, 6 figures annual income, right? So this happened about in my third and fourth year, right? 100K. So it also, I made $1 million at the age of 21, right? This might seem like somewhat of like a proof or somewhat of like a flex to you guys
but by no means am I flexing to you guys. For me, I have to get matured and become successful at a young age so that I could really provide my family with a better quality of life. Now my dad is traveling anywhere he wants. My mom is sitting at the back of Mercedes-Benz S-Class. So $1 million at the age of 21, pretty impressive. And then most thing, like I feel like one thing that I'm genuinely proud and passionate about is this. 2,000 plus happy students, right? So I've coached over 2,000 plus students by now, right? And every single one of them are happy, they are successful, or rather they are making progress towards success and they have achieved results. Recently, I've interviewed some of my top students, Alia who made over $25,000, somebody who made over $10,000, and Carl who made another $20,000 from his funded account, right? So yeah, it's crazy. These students are really crazy. Their success is my success. And I've built the fastest growing trading brand in the industry, right? So if you look at my YouTube channel, just scroll down, you'll see that I'm near 1 million subscribers right now. Something that I'm very proud of because I built that shit brick by brick. And that's only because I was able to simplify a complicated concepts, complicated trading concepts that is so complex and stuff, so difficult to understand. I'm able to simplify them into a way that a 5-year-old can understand, right? That is the main thing. That's the main reason why my channel blew up, right? And it's not because I'm the funniest guy. I'm not gonna lie, I'm a boring ass guy. And it's not because I have the flashiest lifestyle. It's all because of the fact that I'm able to provide tremendous amount of value, which is what I hope to do in this video. Last but not least, if it helps, I've got nothing to sell you. All right, I've got nothing to sell you here, right? By the way, I hate those people who flex a lifestyle. They flex their cars, their chains, their mansion in order to bait you into buying a course, right? I'm not the type of guru. What I am is a guy who's able to do everything he can to provide value for free and also to make sure that you guys learn what you need in order to become successful. So I've got nothing to sell you here, right? I do have like an education company, 1% Club, but like I said, I'm not here to promote it whatsoever, right? In fact, I'm going to close the enrollment soon because, yeah, we just don't want too many customers. We want to focus on our current students. All right, next. Here's basically proof that, I know what I'm talking about. I know something about making money, right? Or I know something about trading, right? And I've made this amount of money from trading. So at least I'm probably like one step ahead of you. I wouldn't say that I'm like 10 steps ahead of you. I'm a millionaire trader. No, because that's not the truth. The truth is I'm probably just one step ahead of you. I've pretty much just like figured some things out that you haven't figured it out yet. So yeah, I just hope to shorten your learning curve inside this video, right? So what is the big promise for this video? The big promise for this video is that I'm going to show you how I went from $0 to making my first $100,000. I'm going to tell you everything, a step-by-step blueprint on how I went from $0 to making my first 100K from trading. As long as you have the patience, you have the attention span to watch this entire video, this journey that you're going to go through, I can shorten it from 3 years to say 1 year, right? If you genuinely learn everything inside this video and you apply what you've learned and you go out there and practice with enough time, you're going to reach this amount. Trust me, it's 100% possible. If such a dumb-ass Asian guy wearing this ugly ass spectacles can do it, you can do it too, right? You can do it. So I'm going to dissect this entire process into 3 core components, right? 3 core components. The first one is strategy, right? So strategy, if you have a good and successful strategy, this journey is going to be much more easier for you. Second thing is funding, right? Obviously, you need money in order to make money in trading, right? So you need to learn how to raise enough capital in order to reach this level because it's very hard to reach 100K if you only have $100 in your bank account, right? Just like what I did when I started. And then last thing is something that is kind of cringe, heart or mindset, right? A lot of people don't like this stuff, but this stuff is the most important stuff ever, right? If you have this can pretty much outweigh all of this stuff right here. All right, so yeah, without further ado, let's just dive straight into it. So let's talk about the first stuff, which is the strategy. I believe that you guys love this part, right? Strategy. And in this video, there won't be any charts whatsoever. If you go to my YouTube channel, you will see there's a ton of chart videos. So the truth is you don't need any more chart videos. What you need is some real cold, hard, pure wisdom from the trading geek himself, right? So first, let's talk about strategy. Okay, strategy. Now, what do you know about strategy? You probably know that there's a ton of trading strategies out there, right? And just to name some right off the top of my head, you got price action, you got smart money concepts, you got ICT concepts, you got, I don't know, indicators, right? RSI, Bollinger Bands, MACD, lots of strategy out there. The question becomes, which one is the best and which one do you pick? My advice is always going to be so simple. Pick one. It doesn't matter which one you pick. You can become successful using any of these strategies here. We got successful price action traders, right? You got billionaire trading price action. You got smart money concepts traders who are banking a lot of money, taking high risk to reward trades. You got ICT concept traders who is absolutely killing the markets, right? And then you got people using indicators. Look at my face. I hate indicators. I'll always judge you if you use indicators. But we got people using indicators and still making money. Yeah, so even though I hate indicators, people are still making money using this stuff thing. So my advice would be stick one and go and master them. The last thing you want to do is to become a jack of all trades and a master of none, right? What you want to do is to be extremely good, extremely proficient at one thing and one strategy only. So pick one and go and master them. Now, if you're wondering which one is the one that I trade, before I erase this, what I trade is what I call market mechanics. Okay, market mechanics. Now, this is a combination of the most profitable parts of smart money concepts, ICT concepts, and price action. So for me, I trade all of this, but what I did was that I dissected, or rather I researched and I did a lot of testing on this to find out what is like the most profitable part of these strategies, and I combined them together to form market mechanics. And this is something that's unorthodox and has never been done before. But yeah, so that's what I did. And right now, market mechanics is a trading strategy that is going to get me to making 7 figures from trading. Yeah, because right now I've only made 6 figures from trading. In order for me to get to 7 figures, I needed to deploy market mechanics. So let's talk a little bit about market mechanics on why it's so profitable and why it's so useful. All right. So let's say you do decide to go to the market mechanics route. There's an entire playlist of free courses on market mechanics on my YouTube channel. You can just go to my YouTube channel, go to market mechanics playlist. You can see the entire playlist of free courses, right? So before you do that, let me just quickly explain to you what is market mechanics and why is it so good, right? So now, what the heck is market mechanics, right? This is something that's out of the box. Market mechanics. This is essentially how the market operates. If you can really understand how the market operates, how and why price move on a deep fundamental level, you can print money. I'm not even joking right now. You can print money. Imagine you are able to trade alongside the smart money who move the market. Imagine you are able to go onto a blank chart and know exactly where the market is doing, what the market is doing right now, who is in control of price, supply or demand, and where is it going to go next. That is the power of market mechanics. And what does it constitute of? Right? So a strategy like market mechanics, it constitutes of a few core components. Firstly is your supply and demand, right? Supply and demand, this is where we identify certain point of interest, okay, that institutions have trade or rather enter large amount of orders, right? Like example, this is the demand area, and now we are expecting price to come back down to this demand area, right? Because this is the price that they enter a large amount of order right here, right? They enter a lot of buy order, and now we are expecting price to pull back to this area, and that is when we can get our entry again, because this is the price point where they are going to enter again. So supply and demand, and then next is order blocks, right? So order blocks is a little bit like supply and demand, except that rather than just large bulk of orders, we are identifying like large amount of candlesticks like this, right? A lot of imbalance in price, right? A lot of orders being filled up at a short period of time. And that we have our order block, right? Which is like right here, right? This is the candlestick before the imbalance. And now same thing as supply and demand. You're just waiting for price to pull back, fill up all the imbalance right here, fill up all the orders right here, and then watch price move up. So these are two things. This is basically how we actually identify the point of interest that we want to trade from using this market mechanics strategy. And the next is liquidity, right? It is extremely important to understand liquidity because liquidity is essentially how and why price move, right? If you can understand liquidity, you will not get stopped out so often. That means you will not lose money. And that means you will not get your trades, seeing your stop loss getting hit every single time. That's because you understand liquidity. Because if you can understand liquidity, then you will not become the liquidity itself. So yeah, liquidity is available above every swing high and below every swing low. And obviously there's a lot of things about liquidity I'm not going to talk about in this video. Like I said, I've made an entire course on each one of these concepts right here, which you can find inside the free market mechanics playlist. And then next, it's also, I believe the one last thing is liquidity, supply and demand, order blocks. Is it inducements? No. Is this it? Inducements? Yeah, inducements is actually part of liquidity. It's basically like traps set by institutional traders, right? Traps set by institutional traders to actually bait retail traders to enter for the setup. Example, when you see this double top, right? A lot of retail traders think that, okay, this means that they should enter for a sell. And then next thing you know, they enter for a sell here, smart money push the price up, stop out all the retail traders, and then push price down. Inducements. And I just realized inducement is just a part of liquidity. Whoa! Market structure. How can I forget about this? Market structure is king, guys. Yeah, market structure is king. Market structure is basically essentially how the price move, right? In an uptrend or in a downtrend or in a consolidation. The ability to identify what phase of the market is it in. Is it the push phase or is it the pullback phase? Is it the consolidation phase? Is it the trending phase? This allows us to know exactly which phase of the market is in right now, and then we can trade accordingly. And the last thing is order flow. Now, the last thing is order flow. This is basically where we dive deep into looking at how, or rather who is in control of price, whether the buyers or the sellers. And we do that by looking at footprint charts, and we do that by looking at what price is doing. Is it in a demand range, supply range? Yeah, and who is really in control of price. That's the main thing of order flow, right? So these are the 5 core components of market mechanics, and this is basically how I trade, right? Like I said, I've already made a video on each one of these concepts, which you can find in the free playlist. Yeah, so anyways, market mechanics. And then, okay, inducement is part of liquidity. I'm not a dumbass for actually writing this down. Yeah, right now I'm experiencing a little bit of brain fog. So, yeah, just hit a heaviest gym workout, So yeah, that's for strategy, right? So now that you have figured out, okay, what strategy you want to trade, and you have picked one to actually go and master, what is the next step, right? Okay, the next step is obviously to learn everything you can about that strategy. Example, if you want to learn about market mechanics, go and watch the market mechanics playlist that I have on my YouTube channel. Like this entire playlist of around in-depth, I think 8 videos, in-depth video on each one of these concepts. Yeah, you will definitely master trading, and you don't even need to buy a course whatsoever. You can learn it for free on my YouTube channel. And that is for market mechanics. Oh yeah, basically after you're done with learning all that stuff, right? Next step is to practice, obviously, right? You have learned, you have practiced, but how do you actually know that this strategy actually works? That's the main thing that you need to do. And that is what I call testing, right? So after you have formed a trading strategy, you need to make sure that you can prove that the trading strategy actually works. Because if you don't, you will always be doubting yourself and your trading ability. When you go onto the market, you will not be able to enter for the buy or sell button because you don't build that confidence yet. You don't have confidence in your trading strategy yet. And where do you build this confidence? Confidence comes from competence, right? And you're only able to build confidence in your trading plan if you have tested it out, right? So this is the key thing here. You gotta test your trading strategy out. There's 3 types of testing that you can do, and that's what I call back testing. Okay, back testing. And then another thing is what I call forward testing. And then the last thing is what I call chart exercises. Now, this allows you to know whether your trading plan actually have an edge or not. So you backtest the trading strategy. By the way, you should do all of this for at least 1 month before you trade on a live account. Okay, at least 1 month. Go and backtest the trading strategy. So how you backtest is that you basically go to trading